In this video, I want to talk about letting the winners run. I'm sure that you've heard that expression before, and we're talking about day trading in this video, not swing trading. Um, but one of the things that's frustrating for a lot of traders is to get into a trade, and then they have a target, let's say of 1%, and they get out of that trade, and then they look back, and the darn thing just keeps on going, and it would have made them a whole lot more profit. And if they had just stayed with that one trade rather than running off and looking for another trade as soon as this one hit 1%, a lot of times they'd be a lot better off. So I want to talk about a couple different things that you can do on your charts, indicators that you can use on your charts to help you stay in these winning trades. But part of the thing is purely psychological, and to be honest with you, part of it is that when we get a winning trade as day traders, we're so anxious to get the profit, to grab the profit and to get out, that we ignore what the charts are telling us. And it's a fear thing. We've so often been profitable on a trade perhaps and had it move against us that we are reluctant to stay in the trade that is moving once we have some profit, because we want to grab that profit. And that problem, it is a problem because it is compounded by the fact that we tend to be very patient with the ones that are moving against us. We tend to be very patient, thinking, well, it's going to come back. It's going to come back. I'm going to make a profit. I was making a profit. It's going to come back. Right? I'm sure you've said those things to yourself. So let's take a look at a couple of things that you can place on the charts and tools that you can use to help you stay in winning trades. Now I'm going to look at two different day trades that were in the Morning Hours Trading chat room. One was on Friday, and that was P, which is for Pandora. And so just to cover a couple of the indicators we're looking at here, we're looking at volume at price indicators over here on the left. That's these green bars. We're looking at volume weighted average price, this orange line. We're looking at Keltner channels, which is this area right in here, and Bollinger Bands, which are up in here, okay, just for this part. And so one of the things is what I call the sweet spot. And the sweet spot is when price is staying above the top line of the Keltner channel, and this is on a 2-minute chart for P. When price is staying above the top line of the Keltner channel and below the top line of the Bollinger Band, then I call that the sweet spot. And a lot of times what you'll see is price staying on these big winners. Price will stay in that channel and just continue to move up. Now this trade easily offered us 1%, but as you can see, it continued to move much higher. So if we move the chart to the right, you can see how price is still staying in that sweet spot, right? Right up in here is what I'm talking about. And it's a visual thing, but that visual thing can help you stay in the trade. Now I also have lines of support and resistance, such as pivot lines. So that might be a place where you want to take a partial exit and move your stop a little bit higher to make sure that the trade doesn't steal all your profit, right? And you start to hit some resistance, but then it moves up and then finally pushes down. And one of the rules you can also use, this is a 20 EMA, exponential moving average, on a 2-minute chart, again running through the middle of the Keltner channel. So when price breaks down there, I would go ahead and get out of the trade. But a move from here, it's an additional 4 or 5% over what most traders probably got out of the trade, because they stayed with the sweet spot in the Keltner channel, just above the Keltner channel, and let those prices continue. So that's one idea you can use. You can also go up here to price, and you can edit that and use Heikin-Ashi candles. And Heikin-Ashi candles just give you a visual. It's kind of like an internal moving average, for lack of a better way to describe it. But when you see, most people, if they see candles like this just stair-stepping their way higher, that gives them more confidence to stay in the trade. And again, this doesn't break down until back in here again. Okay, that's just another tool that you can use, and this is called Heikin-Ashi candles. There's more to that than just what I'm showing you, but that's just part of the basic part of it. You can also add other indicators. For example, you can add a commodity channel index, and you can set that at 14, or you can set it at 11 for day trading. But one of the things I have is I have CCI with the 0 line right in here, and as you can see, CCI stays above that 0 line all the way until here, giving you again no reason to get out of that trade. So CCI is another indicator you can use. Another indicator you can use is directional movement, directional index. And as you can see, I have mine set at 9, and again, DI stays positive, and I have a horizontal line placed in here. You can go in here and you can draw horizontal lines on your chart if you're using TC2000. I have a little dotted line set at 25 for mine, and you can see where price is staying above, where DI is staying above that 25 line up until there, and that happens to coincide with that crossing, happens to coincide where CCI falls below 0 and where price starts to fall below the 20 EMA. But up until that point, there was no reason to get out of that trade, and this trade could easily have made, just by watching it and just by sitting and doing nothing, could easily have made traders 6% versus the 1% that most traders got out of that trade. So this is one. I'm going to show you another example from today, which is the 17th of November, and go over to this one. Again, I'm going to go over it line by line just so you can see that that was not just a one-time thing. So CLDX, again, we got into the trade early. I posted a buy on this trade early on. Again, you can see strong volume at price. Price bars over on the left, green bars. Price staying above the volume weighted average price line. And this was on a day today when the market was not actually even bullish at all. And yet this thing continued to stay up in this sweet spot that I've just talked about, above the top line of the Keltner channel and below the top line of the Bollinger Bands up in here. Same chart, same 2-minute chart I'm looking at, and again it crosses down the 20 EMA back in here. But again, it started way back in here around 1650 and ended up in this area before it started to break down. So that's a huge gain for one day for a day trade. Again, we can look at our other lines. Let's go back and let's look at the Heikin-Ashi candles again to use that as a visual. And once again, if you see these Heikin-Ashi candles, you see this kind of stair-step movement. Green bars stepping up, higher highs and higher lows. Then that gives you a visual that you don't want to get out of that trade. And then when you see things start to stair-step down, then you know, okay, well, I need to exit. But that's what trending trades tend to do. Those are some of the characteristics. So there are characteristics of trending trades, the ones that you can let run. Again, looking at CCI, where do we break down the 0 line? Happens right in here. But again, that trade lasted for an hour, not just for 5 minutes. DI, where does DI break down? Right in here. Again, these are different indicators measuring different things, but when they all coincide to tell you the same message, then you know it's time to get out, right? But how much more you could have made on that trade by just staying with those trades rather than trying to run off and chase another flashy chart that might look promising and take your risk on a new chart when you have one in hand making you money if you just stay patient with it, look at the charts, and see what's happening. Well, I hope you enjoyed this video on letting the winners run. Hopefully it'll help you increase your profits on trades that deserve to be held a little bit longer than past just a small 1% profit. If you would like more information about day trading, there's a website, my website. My name is Bob Joyner, and I have a website called startdaytrading.com. There's a hyphen in between each word. There are a lot of articles here about day trading basics, the psychology of trading. You'll also find a section as you scroll to the bottom where it says videos right in here. If you'll click on that, then you'll see that I have a free 6-part video series on support and resistance. You can click there and go to that web page and sign up for that free series. I also have a free series on currency trading if you're interested in that. So wish you well with your trading.